Yeah, it's another day that we're going to look at a question on business data analysis, and in this case we are looking at a consolidated statement of cash flow question. Yeah, I know we have done one for disposal of a group. Here we are dealing with one for acquisition of a subsidiary. Acquisition of a subsidiary, the consolidation, and we shall read through. The following draft consolidated financial statement were extracted from the financial records of G Group for the year ended, that is September 2022. So we have the consolidated statement of profit or loss for the year ended, that is September, and let me just correct this. It is the statement of profit or loss for the year ended, that is September 2022. So I've been given that statement, and the statement of financial position, have been given that. Additional, the PPE, property, plant and equipment, comprise the following: as of 30 September and as of 30 September 2021 and 2022. The cost, we have the provision for depreciation and the carrying amount. During the year ended, that is September 2022, G Limited disposed an item of equipment for cash proceeds of 260. The equipment had cost 750 and had accumulated depreciation of 370. Any gain or loss on disposal and depreciation on property, plant and equipment is included in cost of sales. On 1st January, G Limited acquired 75% of 100 million ordinary shares of 10 each in S Limited. The acquisition consideration comprised a share exchange on the basis of 2 shares in G and G Limited for every 3 shares acquired. 3 acquired shares in S Limited. G Limited was also to pay its 10 million to owners of S on 1st January 2023. G Limited cost of capital is 8% per annum. Then the market value of ordinary shares at January 2022 are 30 and 20 for G Limited and S Limited respectively. The fair value of assets and liability of S Limited at the date of acquisition was as follows. We had property, plant and equipment, the cost, the provision for depreciation, inventory, receivable, current tax, these are refund, deferred tax asset, and trade payables. So you get the net assets. This is the net asset of 25. The group policy is to measure and controlling interest in subsidiaries at fair value at the acquisition date. The market value of subsidiary ordinary shares are considered to be representative of the fair value of the shares held by non-controlling interest. Investment at fair value through profit or loss consists of highly marketable and risk-free securities held by G Limited. Any impairment loss on goodwill is included in the administration. Now, let me just correct that. Administration expense. Administration expense. Then required consolidated statement of cash flow for G Group for the year ended, that is September, using the indirect method in line with International Accounting Standard 7 statement of cash flow. So I'll do it here, G Limited, so that here we'll reserve it for working. So G Limited, consolidated statement statement of cash flows for the year ended, that is September 2022. I'll merge and center that. Even this I'll merge and center, and I'll bold that. I bold this and I bold this. That way, we said cash flow statement has got 3 parts, and can use a thick. So there's no thick alone. Okay, so that way, start with operating activity. Operating activities, and here you just pick profit before tax. Here our profit before tax. Yeah, I'll fix my values. Let me fix them at that end. Shillings in million. These are shillings in million. Million. And I can have these other column here, shillings in million. Shillings in million. Yeah, that way. Shillings in million. So here the profit before tax, here we had that value, and let me to just format that end to times new Roman font 12. Yeah, just love using that for more visibility. Yeah, so we had that value. Yeah, that way. Okay, so 3440 was the value that we had. So we deal with the adjustment. Here we have finance cost. Finance cost, we add it back because that one shall take it where? To the financing activity. Shall take it to the financing, and I will put it as a positive because we are adding it back. I will put a negative because already it's a negative. We add it back, and again permit me to edit these two columns to incorporate to customize this for the negative so that I use brackets. I use brackets for any negative value for that part. So we have the finance cost. The other thing we had the fair value gain on short-term investment. Yeah, this will be part of financing activity, the short-term gain. So we shall minus this value because it was added, the 170, and I think that's all that we had here. Yeah, that's all. So there's some workings we shall do on this end. I'll do my workings here, my workings on this end. So the first working, I want to deal with working for what, whether we had a gain or loss on disposal. We are told we sold, we had a disposal of 260. So gain or loss on disposal, my working one, gain or loss, gain stroke loss, loss on disposal. So my proceeds was 260. Proceeds, it was 260, and my net book value, NBV, so we are told the cost was 750. If I can scroll it down, you can see that, yeah, our cost here, the equipment had cost 750 with accumulated depreciation of 370. The accumulated depreciation of the 370. So with accumulated depreciation of the 370, so I will take that minus, so minus 370 that way. So we have a net book value of these. So we shall have a loss in this case, whereby this one I will put a negative. I will close this bracket, that, and here I put a negative. So negative 380. So loss on disposal, alt equals, so loss of 120. So loss, so we shall have loss on disposal of plant. I think it was plant here. So the loss we add, so I'll put a negative and I pick this value, yeah, 120. Other thing, we had depreciation here, provision for depreciation, shall have depreciation here, depreciation, and depreciation of PPE, and our depreciation, we shall pick the value at the beginning. The value at the beginning was what here? At the beginning we started with 15 to 50, at the end we had 19,500, but we sold what? The one that we sold had an accumulated of 370. Yeah, 370 here. So we shall take 15. We need to get a negative, this minus this. So we'll take is equals to these value minus this value. So I'll minus the two of them. Let me start with the minus this. So let's start with minus, I'll see. So this one, and I minus 370, so that it will increase. The 370 is the one that we disposed here, and I close the bracket and I enter my value there, whereby it will give us 46. It means here I'm supposed again to start with the negative here to the beginning. There must be a figure. Just a minute, for this depreciation is not adding up, so it should be equals to, at the beginning we had 15. Okay, so and we had the one that we acquired, so we had this value. Let me put it in bracket, that value, and we acquired. So acquisition, to me, if it's minus, or I can convert, let me convert them into positive. This one I'll put a minus, and I add what we acquired. What we acquired here, so still minus this one, because again this one was a negative. What we acquired in this subsidiary, and we minus the value at the end. At the end, we'll open the bracket, I'll go back here. The value at the end was this value, and here I will convert it again to positive. Yeah, and I add what we sold, 370, the one that we sold. Yeah, I believe that one, this will be positive, this will be positive, and when we minus, the answer that it should give us a negative, I believe so. And we enter and we get 1720. Yeah, that's okay. That was our depreciation on the PPE. So we have finance cost, fair value gain. So here the fair value gain on short term, loss on disposal, and we have the depreciation. Then we need to find the goodwill that was impaired, and to find the goodwill that was impaired, first we find the goodwill that we had on acquisition S Limited. Goodwill on acquisition of S Limited. Goodwill on acquisition of S Limited. S Limited. So we paid to acquire S. We are told something here. We acquired 75% ordinary shares of 10 each. The acquisition comprised of a share exchange on the basis of 2 shares in G for every 3 shares acquired. So share exchange, yeah, share exchange. So we know they had 100, it will be 100 million. We acquired 75, 0.75, and we gave them 2 for every 3, 2 over 3, at a price of 30. Our price was 30. Let me take you there. Here we acquired 75% of 100 million ordinary shares of 10 each. The acquisition consideration comprised a share exchange on the basis of 2 shares in G, this is the holding, for every 3 shares acquired in S Limited. G, so for every 3. Here the market value of ordinary shares on 1st January were 30 shillings, because we are giving them shares of G at 30 shillings, and I will enter that value, which will be 1500. Then we have deferred payment. deferred payment, payment. We have that amount of 810 that we are deferring. We are not paying it today. And the rate of deferred payment is 8% here. The rate, let me just, okay, let me eliminate this first. So we shall have the rate. So deferred payment, deferred payment, this is a PMT, which is 810 at a rate of 8%. At a rate of 8%. Yeah, so this one I can convert into percentage, 8%. I need to get the present value because this one, the time is 1. The time is 1 year. We are deferring for a period of 1 year. So I need to get the present value, or even you can use the NPV, whichever way it will give you the answer. So we'll put NPV. I will tab that. Sorry, because to NPV. So I need the rate and I need the present value. Sorry, let me just find the present value. PV. We need the rate. The rate was 8. Number of period, so we'll put comma. Number of period is 1, and payment is 810. That way, and I close the bracket and I enter, which will give us the 750 here. So I will change this to positive, yeah, by putting a negative sign there. Remember, it is assuming their payments, that's why it's putting a negative, so it will be 750. I'll remove the currency to general. Yeah, 750. This is a deferred. Then we have NCI, fair value NCI, fair value NCI, fair value NCI. So for the NCI, we have the value was 100, NCI is 25, and the market value was 20 shillings. Let's go there. Here, yeah, the market value of ordinary shares on 1st January or 30 and 20 for G, and the point that gives us that is this point. The group policy is to measure non-controlling interest in the subsidiary at the fair value at acquisition date. The market value of subsidiaries' ordinary shares are considered to be representative of their fair value of shares held by non-controlling interest. So the market value was 20. That's what we are considering here. So by 20, and I enter. So that is the total value. Alt equals, and I enter. So the total value that we paid to acquire was 2750, and we less net assets. Net assets acquired. So when you look at the net assets that we acquired here, we acquired net assets valued at 25. This one, the net assets that were acquired, 25. And I'll put I need this to be negative, and alt equals the two of them to get our goodwill on acquisition. Goodwill was 250. Goodwill on acquisition was 250. This is goodwill. So the key thing we are finding that we need to find the goodwill impaired. Impairment is loss of value. Remember the goodwill that we had at the beginning here. At the beginning we had this for 140. We acquired this for the subsidiary 250, and the closing value was 42. So it was impaired by what? It was impaired by 190, and that one we are adding it back. Because it is non-cash. And I think that's all. We get the cash flow before working capital. before working capital. Working capital, cash flow before working capital. So here I'll put alt equals, need the sum, and I enter. Then here again alt equals, I need this from here, and I enter. I'll put top border, and I will bold this value. That is the cash flow before working capital. You go to working capital, and under working capital, for the working capital, look at the assets here, the current assets, the inventory first, then followed by receivable, and investment is non-cash. Look at the payable. I think that the three of them, there is inventory, receivable, and payable. We need to look at the change, whether it was an increase or it was a decrease. So for the inventory, we started with this 7th, and we acquired what for the subsidiary? Yeah, subsidiary had inventory with 20, and we minus the end. The end we had 89. We'll find that it increased, and I can take this, can autofill the 2 to get the 240 for the second. And when I do the same, let me see whether for payable. So for payable it cannot pick because the payable is different. So for the payable, we shall start. Payable is started with what? With 87. So we shall start at the end, because this one now it's an increase, and it's an increase, an inflow. It is an inflow. Yeah, you can start, or you can start with this and then you put a negative sign. So we started with this, and I will minus this, and I also minus what we acquired, payable. So I will add, instead of minusing this, let me add, because already this is a negative sign, this one, and I enter. So you can see, so payable increased, it decreased by 160 by the end of the day, so we paid, that's why it's a negative. So cash flow before tax, cash flow before tax, cash flow before tax. Here is alt equals, we add this, the sum, here again is alt equals, yeah, this two, that way, and I'll put top border, and I'll bold that value. So that's our cash flow before tax, cash flow before tax. Then what else did we have? Go to the next. So depreciation on PPE, sorry, let me adjust. It's supposed to be a positive, value. It's not supposed to be a negative, because it's non-cash. We are adding it back. It was deducted. It's supposed to be positive. So that this negative is a negative that's supposed to be eliminated. Not yet. So here the negative, just a minute, it must be a negative that I used. That is not supposed to be there. Okay, 79. Then okay, so here we had a negative. I'll convert this then to be plus, let me say that, and I change this 38 with the negative. Okay, so let me just repeat this. for the depreciation. So depreciation, it should be the value that we had here. We use bracket. So we had this, the opening, and I minus, so that to add this one that we had, I will minus this value, and I close the bracket, so that the effect of minusing that, so minus, and this one I minus, so that it will give me when I minus, it will be positive, and then I minus the values. So I will add the values at the end. Open the bracket. I'll start with minus this value, and I add what we sold, there is 70, this one, and I will close that. Okay, so this will be positive. When I put minus, this will be positive, and this will be positive. Then here it's supposed to be minus. Wonder why it's not agreeing to 1720. And now I need this value to be a positive. Let's see, when I include a negative sign at the start, so it makes it totally different. Because I need that to be positive. I'll start the opposite then. Sorry, let me just start it all over again. I'll start the values at the end. This, and I will use a negative, convert it into positive, minus this, and I add there is 70. I close the bracket, and I minus the values, minus the values at the beginning, and I minus to convert it into positive what we acquired, and I close, and I enter. And that one is okay. It's okay that way. Yeah, it was just a small error. We'll go to tax, the tax paid, and for the tax paid, we have both the deferred and the current. So at the beginning we have the deferred tax of these. So I'll use a bracket. We had this, and we have this current tax, and I will minus to add the one for income statement, income tax, this one, and I will minus what we had at the beginning. I'll open the bracket. At the end we have deferred tax, and I add the current tax, and I add the deferred. We have the current tax refundable, it will be on the debit, and I add the deferred tax asset, still it will be on the debit, and I enter. We shall get a tax of 415, but we need it as a negative. Yeah, you see, when I put a negative, no, so instead of putting a negative there, here I will add. So in a minus here, the signs in Excel, you must be very keen on the sign. See, a small change, it changes everything. So here we'll change this to be positive, and see how it will change. 30, 45. So the initial answer that we had was correct. The only thing is the what. So for 15, but I need this to be negative. So I can put here a negative and I can put here positive, so that to maintain the same answer as 415. And that one is okay, negative and positive, so that you get 415 as a negative. And you get the cash flow. Cash flow from operating activities. Cash flow from operating activities. I'll take equals these two. I'll enter. I'll bold this. I'll put the top border. Go to the second, cash flow from investing activity. Investing activities. And under investing activities, here we have the disposal proceeds. Disposal proceeds on plant. We sold plant, and plant we sold it for what? We had a proceed here. Yeah, proceeds of 260. We sold plant for 260. That's what we received, and we had the gain. Fair value gain on short term. Here I'll put it as a positive. I'll put negative because it's already negative to convert it. Yeah, we had the gain, fair value gain, and we acquired some assets. Acquisition of PPE. Acquisition of PPE. So we acquired PPE here. When you look at our PPE at cost, we'll deal with them at cost here. At the beginning was 19, and at the end was this. I'll take at the beginning and I add what we acquired here. We acquired 5,000 at cost, and the one that we sold at cost was 750. I will minus what we sold, minus 750, and I minus the value at the end. The value at the end was that. We'll get we acquired PP valued at what else did we have? Revaluation, retained, deferred. Okay, so I think there was other apart from that we acquired. Yeah, I think, yeah, not one. Yeah, if we was to use the cost, yeah, this one is net book value. The one that we have there, is net book, is the carrying amount. If I was to use the cost, I could have used this, the movement in PPE, or if I was to use the net book value, let me change this and use the cost. So the cost that we had, if I was using the cost at the beginning, we had this, and we acquired 5. This one we sold 750 at cost, and we closed with 43. I'll get it to 750 at cost. I think those were the 3 items. Remember, we did not, where the subsidiary did not pay cash, we paid what? Share for share. This was deferred. It will be paid in 2023, and there was no any dividend from associate in this particular question. So get the cash flow here. Cash flow from investing activities. Cash flow from investing activities, how it equals the sum of these, and I will bold that. Yeah, that way, 3 from that. Then we go to financing activities. Financing activity, and financing activity, look at the shares. Look at the shares. What happened to the ordinary shares? What happened to share premium? And the retained, where we shall be looking at the dividend. And we look at the ordinary shares. We started with this. Need to find the issue of shares. We start with the value at the end, and I minus. You can open the bracket. At the beginning we started with this, and we acquired. We issued share for share. This one 1500. So that means we issued shares of 3.5. Share premium. For the premium we closed with this and we had started with this. I enter, we had 1500. So the dividend paid, so we look at it in two ways. For holding company and the NCI paid a dividend of what? So for the holding, we deal with the retained. Now you look at the retained earnings. We started with this at the beginning, so let me take at the end to get a negative minus. At the beginning we started with 43 and we add the income statement, our attributable to holding, which was 2040. So we paid a dividend of 370. For the NCI, they started with a non-controlling of 1840. I minus, I will open a bracket, the figure at the beginning, I add their share here attributable to non-controlling, and I add the share of the net assets that they acquired here by 25%, by 0.25. I close the bracket and I enter. You'll find that for them they paid a dividend of 385. Then we're done with that. They deferred bank loan. What happened to the bank loan? The bank loan is started with 2, 3. We had this, so we repaid the bank loan. We take the figure at the beginning and we minus the figure at the end. So we repaid 400 of the bank loan, and I think all that we have covered. The only thing that we shall bring it back here is the finance cost. Yeah, the finance cost that we paid here, finance cost, and we pick it the way it is. Finance cost we paid 280. We get the cash flow from financing activities. Cash flow from financing activities, alt equals, and I'll add this sum, enter, and I will bold this value. So I had that 5, that value. Then cash flow for the year, cash flow for the year So cash flow for the year comprises of the 3 here, the 3 of them here, and I will enter. So the cash flow for the year was 70. I'll put the top border, and I'll bold that. Then you have opening cash and cash equivalent, and the closing cash and the cash equivalent. So opening cash. So remember cash, we had this cash at bank. Did we have any overdraft? There was no any overdraft. The one that we acquired, they did not have any again. Yeah, they did not have any on this end. They did not have any cash. So that means we shall only have the investment at fair value. When you look at this investment, the change was only the 170 that was there. The investment in fair value was only that. So the change was because of the value that we had. So the cash at bank here, we started with this. The opening will be 240, that, and the closing that we had was 310. That 310, and when you add 70 plus 240, you'll get the 310. That means it has reconciled at that particular value of 310. I'll bold that. I can bold this, the closing cash and cash flow for the year. That way. That's how that question was done. Let me correct here. There must be an error there, where under yeah, it was supposed to be 2400. Just a minute here. This value should be 2400, not 2499. 2400, that way. So that now when you look at this change is the 170 that we had here, the gain, the fair value gain, or the 170 that was reported in the income statement. And that's how the question of consolidated cash flow was supposed to be done. Yeah, that's how it was supposed to be done. Starting the operating activity, yeah, getting the profit before tax, the finance cost, the fair value, all those, you get the cash flow from operating activities. Then investing activity, here, investing activity, we had the investing activity there. And then here the cash flow from investing activity, then financing activities, and here the cash flow from financing activities, and then the cash flow for the year, then closing cash and cash equivalent. That's how you deal with the disposal whenever you're dealing with the disposal under the not disposal but acquisition of a subsidiary, consolidated statement of cash flow. So continue subscribing for more content in this particular area.